Okay, we shall be considering. We have looked at the income statement. We have looked at the statement of financial position. Now we are going to be looking at the statement of cash flow. This is an aspect of financial statement which provides useful information about a business organization activities in generating cash through its operations to settle debt, distribute dividends, or reinvest such funds in order to maintain or expand the operating capacity of the business financing activities, be it debt or equity, and about its investing or sending out of cash. The statement is the basis for the analysis of cash flow, which is useful for short-term planning. So, and that is what statement of cash flow is just for a short-term planning. In principle and practice, every enterprise needs enough cash to settle its indebtedness that matured in the near future, pays interest as they fall due, pay dividends and other expenses. This is a financial position that changes basis on cash and cash equivalents. It summarizes the causes of changes in cash position between dates of last and preceding balance sheets. The cash flow statement is also similar to fund flow statements. The only dissimilarity is the emphasis on cash. In short, cash flow statement summarizes the flow of cash in and out of the enterprise over a period. Simply put, the statement of cash flow tells us the inflow into the entity and the outflow out of the entity in any given accounting period. We have the basic elements of cash flow, which is the operating activity, the investing activities, the financing activities. Pandi 2005 stated the sources of cash flows as the profitable operations of cash, decrease in assets, increase in liabilities, and sale proceeds from issue of shares. It also stated that the uses of cash are the loss from operation, increase in assets, decrease in liabilities, and redemption of redeemable shares. It's also important for us to understand what cash flow management is. The analysis of cash flow benefit is for short-term planning with enough cash to pay indebtedness, maturing in the near future, to pay interest, other expenses, and to pay dividends to shareholders. The enterprise can make projects of cash inflows and outflow for the near future to determine the availability of cash. This cash balance can be matched with the cash required for the business for the period, and appropriate arrangement can be put in place to meet deficits or invest surplus cash temporarily. It is worthy of note that historical analysis of cash flow provides insight to the preparation of reliable cash flow projection for the immediate future. Now, the historical analysis is a concept that tells us that assets are recorded at the value which was actually paid to purchase that item. That is what the historical cost concept is telling us. And in the preparation of the cash flow statement, it is prepared based on a historical concept approach and not a present value or a future value approach. On the other hand, the cash flow statement enables management to explain the change in cash and cash equivalent position. Management can use cash flow statements for their dividend policy, that is, how much dividend can we retain, how much dividend can we pay out, the cash generated by operation, investing, and their financing policy. The first thing to note in the preparation of the statement of cash flow is that the main thrust of cash flow statement is to reconcile the opening balance with the closing balance of cash at the end of an accounting period, and therefore we start with the balance at the beginning of the year. And cash flow statement is concerned with cash transactions and does not distinguish whether they are of revenue or of capital nature. Cash flow does not involve adjustments like income statements. So, looking at the cash flow, the basic three elements: the operating activity, the investing activity, and the financing activities. All these elements depict inflow and outflow of fund or expenses, and how management will be able to manage their cash flow in terms of dividend policy, in terms of dividend payout, in terms of dividend retention, in terms of financing and investing into various investments and projects. Thank you for listening.